Welcome to your Flashback Friday edition of Watching Your Wallet Weekly. I'm Sasha Bray, and we are taking a look back at all the money topics that we covered this week, including some ways to approach 401k uncertainty when the stock market is on a roller coaster. We're also laying out some important changes that you need to know about the portal where people can go to report problems with things like credit reports and debt collection, as well as 3 key ways to navigate the housing market today. Finally, we explore some ways to make and stick to no-spend challenges, plus ways to make sure that a side gig is making you money and not new problems. Here's Watching Your Wallet Weekly. 401ks can be difficult because we know we have the money. We never physically see the money, but when you know you've earned more or lost more, especially when that change happens quickly, it can definitely lead to some feelings.
And generally, when we're talking about investing, you're supposed to buy low, right, and sell high.
Many of us buy, sell, and trade on the stock market to contribute to a 401k plan for retirement. Financial advisor Marcus Warren believes it's an effective and important way to get ready for your next chapter after your career. But he stresses, don't let your brain make you broke.
Your brain, you're fueled by really 2 emotions that drive your behavior, especially when we're talking about money, and that is fear and that's greed.
The stock market is certainly seeing its ups and downs in 2026, and Americans are feeling all the highs and the lows. Political conflict, the war in Iran, tariffs, inflation, stagnation. These factors, they're many, and the market's response can be terrifying or thrilling.
And so they get scared, they hear that, hey, the market's going to continue to go down, there's uncertainty out there, what do I do? And then people tend to jump out.
Then when it soars,
people jump in and they want to buy as the market's going up. The reason your brain will make you broke is because when those emotions kick in, fear and greed, you end up doing the wrong thing at the wrong time, and investors do it all the time.
Warren says stay calm and stop constantly checking your retirement assets.
They open up their statements every month. They're always looking at every week, they always want to check their account. That is what drives that fear and that greed.
It's been said that 99% of good investing is doing nothing, but Warren says there are a few things that you can do.
One is you need to automate most things.
He suggests the set it and forget it method. Your contribution is made each paycheck emotion-free. Now, if your 401k journey has a long way to go, your strategy is different from those who are stepping into retirement sooner.
When the market is down, that's fantastic. You want to contribute even more because you have a long time horizon to recover, and eventually the market does recover.
If retirement is in your sights,
that's when you should take a lot more risk off the table so you don't see those wild gyrations in the market. And the market, it doesn't move in a straight line, but it does move up and to the right, meaning that it eventually recovers, you'll be fine.
A 401k is one of the best things that you and your employer build for your retirement. So make sure that you contribute if you can, and if your company is willing to match a certain percentage, at least put that much in. Not taking them up on that match is like walking away from free cash. Changes to the complaint portal of the Consumer Financial Protection Bureau are sparking a fight over who gets help and who gets blocked. The portal is meant to give people a place to report problems with financial companies, including credit bureaus. But some advocates say that new messages added to that process could make the process harder, or at least more confusing. Chi-Chi Wu is Director of Consumer Reporting and Data Advocacy at the National Consumer Law Center.
The change is they put in not 1, not 2, but multiple screens before you can file a complaint, telling consumers that if they have a complaint against the credit bureaus, that they have to file a dispute with the credit bureaus first and wait for that to be resolved before they can file a complaint with the CFPB.
Wu says that language could leave some people thinking they cannot file a CFPB complaint until they take other steps first.
We are concerned that this could deter some consumers from filing complaints.
But industry leaders see it differently. Dan Smith, President and CEO of the Consumer Data Industry Association, or CDIA, says the system is being flooded with complaints, which he argues are not legitimate.
What consumers are doing, they're using the complaint portal in an attempt to wash their credits, right, by inundating the system with millions of complaints. And we see data as high as 95% of those complaints are not legitimate dispute requests.
The CDIA has pushed for changes to the portal, saying the CFPB should do more to screen out complaints that are inaccurate, misdirected, or tied to credit repair abuse.
And we're just asking the Bureau to look at your system, look at the data, analyze it, and see if you think those are legitimate complaints, or are they people trying to credit wash? And you shouldn't allow your system, the federal government system, to allow people to perpetuate illegal activity.
The CFPB sent a statement defending the change, saying, quote, by reminding people of the legal process to fix or investigate their credit, we're able to help more people. Right now, the system is overwhelmed by issues that aren't related or CFPB is not able to solve, end quote. The agency also said that by law, people reporting inaccuracies or incompleteness on a credit report first have to report it to a credit reporting agency before the CFPB can open an investigation. Consumer advocates remind everyone that people should continue to document their problems and file complaints if they believe their rights have been violated. Yes, it can be tedious, but planning is key when buying a home, and it's never too early to start. Cherry Dale, Vice President of Financial Education at Virginia Credit Union, says when you're looking at what steps you need to take, there are 3 things to concentrate on.
You want to be in the higher 600s. Credit scores range from 300 to 850. A good place to start is 600 if you're trying to kind of rebuild that. Keep in mind it's risk-based, so the higher the credit score, hopefully the better rate and you would get on that loan.
Then Dale says you want to look at your debt to income ratio, also known as DTI. She says lenders are looking at your credit card, auto loan, and personal debt. So pull your credit report and see how much of your monthly payments are going toward debt based on your income.
If you're at 10%, that's a pretty good place, actually. If you have no debt, that's a wonderful place to begin because you can afford more house. When you are getting to the point of getting that mortgage, you really want to stay under 40.
And finally, you want to try to build up a down payment. Create a future home fund and automate your deposits into that account so you don't even have to think about it. You've probably heard of no-spend challenges. They're really popular right now because they're a way to get your spending on track and kick off some savings. NerdWallet says that it found 1 in 4 Americans have tried a no-spend challenge, but 1 in 3 who tried it just this past January failed. NerdWallet's Kim Palmer says that speaks to how popular the trend is, but also how hard it is to stay on track.
A no-spend challenge basically means you're going to spend only on essentials for that entire month and you're not going to buy any extras. So that means skipping things like the clothes you might want or an extra toy for your kids and really just sticking with essentials. And the goal is to reset your spending and to realize maybe I don't need to be spending so much on these extras, and then we can start saving more.
You can start a no-spend challenge any month. And if you want to try it, Palmer says there are a few things you need to keep in mind.
First, try to get some friends on board too, because it can be really helpful if you can share the challenge with other people, maybe even share about it on social media, and that just generates some extra motivation to stay on track. We also found in the data, because such a significant portion of people do fail at the challenge, that you want to make sure you're ready to forgive yourself.
Now, don't feel bad if you trip up or make an extra purchase. You can always get back on track, and Palmer says sometimes it helps if you narrow down your no-spend challenge. For instance, pick one category like online shopping and then steer clear of just that for the month. The goal is to have some extra money at the end of that challenge period that you can use to either save or perhaps even pay off debt. Gig work can boost your income, but it could also create new money problems if you're not planning ahead. But let's start with what a gig job is. It means that you're earning income, providing on-demand work, services, or goods, often through a digital platform like an app. So think of Uber or food delivery. Stoy Hall is founder and CEO of Black Mammoth, a financial planning and wealth management firm. He says if you're working a side job, you have to change your mindset and think of yourself as a business owner.
If you have a gig, because it's not W-2, it's usually 1099, you are a business owner. So you need to start operating and thinking a little more like a business owner. Separate accounts, maybe an LLC, understanding the tax consequences, but also understanding the flexibility in that and the tax write-offs that you get, which might not help you today with your cash flow, but it's definitely going to help you come tax time.
The thing about gig work is that it's always up and down and not always a consistent stream of money. That's why Hall says you have to figure out your baseline, meaning the minimum you need to make from this job each month.
If I know that, hey, $1,000 a month I need no matter what in expenses for me to survive or to meet whatever I need in my life, then I know when I have months that I make $2,000, I need to set aside that $1,000. In the months I make $500, I'm going to pull from what I set aside. And you only are stuck to that $1,000.
Hall says if you've made $2,000 for 6 straight months, then it's time to adjust. Just make sure that you understand your tax situation, your goals, or what this gig has done for you. He says people often get in trouble when they make extra money for months in a row and then just spend it all without a plan. With this Watching Your Wallet, I'm Sasha Bray.